Folks, if you're not paying attention, you could miss some very important things. Here recently, defaults in SBA loans have started to skyrocket. We are already seeing SBA make some drastic changes to reduce their risk profile. We, of course, always have these conversations with the concierge to small business lending, the one and only Bo Eckstein. Bo, how you doing, man?
Doing fantastic.
Yeah, it's always interesting. You know, we're seeing a lot of changes at FHA and Fannie and Freddie on the real estate side. I am even starting to see changes on SBA. Like I saw Cody Sanchez, for example, put out a post in the last 24 hours talking about these changes. So I was going to come to you, but I think it's important for us to step back and realize that defaults are up. We are seeing defaults on SBA loans rising, forcing the administration and the owner, folks to make changes, because that's a risk. So what is actually going on? What are they changing?
Sure. So one of the big things that I saw was they're coming back with the franchise directory. They discontinued that. So franchises essentially need to be listed on this directory in good standing to be an eligible franchise to be financed. So the major banks, they're basically, I had a conversation with one of the bankers I work with at Huntington, which is probably the largest franchise lender in the nation. And she said, based on what we've talked about, because the SBA puts out the SOP, which is basically the guidelines, and they keep on updating them. So this update basically said we're going to bring back the franchise directory, and June. So I think starting June 1st, and that you have to be listed on it and updated. So you have to. So there's a lot of franchises that aren't on it because it was discontinued a couple of years ago. So some of the emerging franchises. So it'll be kind of a mess picking up the pieces and figuring out, is this just Huntington's policy or not? But basically the directory is coming back. The other big thing is merchant cash advances, MCAs, are now not eligible for refinancing. So a lot of these merchants, they use MCA, they get quick capital because it's just 4 months of bank statements in a loan app, and an MCA is an advance against future earnings. I actually invest in MCAs because it's pretty lucrative, because they pay a pretty high factor rate. It's not even a loan, it's an advance. So like there's a high default rate, but basically if you know what you're doing and you put money across a lot of the MCAs, you'll have about a blended 10 to 13% default on those types of deals, but you put a little bit in a lot. So anyways, we don't have to talk about that, but that's all lenders with delegated PLP authority to process loans under the delegated authority. I think what that stays, a lot of lenders would take risky deals and they wouldn't do it under their license. They would send it to SBA to underwrite because they're like, oh, we don't know. We don't want to make the call and have it on our books. We want them. So now I think what they're saying is, look, if you're going to do a deal, you have to and your PLP, you have to sign off on it. Don't send it to us to make that decision. It's your job, your license, which that makes sense to me. The other big things are on partial buyouts. Essentially, before the owner, it had changed where I could negotiate a deal and the seller would retain less than 20% ownership of the business on a partial buyout, and he wouldn't have to guarantee. Now he has to guarantee it for 2 years on a limited guarantee. So that's a big kind of crusher, because we have a deal right now that we're working on that we have to close before. We have to get a case number before June 1st, or we have to revert to these new rules. And it's like a huge loan. So that's another big thing. Also, loan amounts over 350 now, they will look for additional collateral. Before it was 500,000, now it's 350. Wow. So, if you have a primary residence, got a lot of equity in it, or rental properties, then they would put a secondary lien to make up for that collateral shortfall. And they also, now you have to have life insurance on deals under 500,000. There wasn't a term life insurance requirement. Now you have to have term life. Wow, it makes sense, because if you're the key person and you die, right? So a lot of it, it's not terrible, but there are a lot of things that are changing. There's going to be, I do a lot of franchise financing and franchise sales. So navigating some of the deals that I have will be challenging. But basically, they're cutting they were too liberal after COVID. We had to open up our Komodos and stimulate. Now they're saying, back down, which is kind of interesting, because I would think that we'd keep it open for a while more. But I think obviously the recession is here or coming, or whatever we're going to say it is. And I think it's going to be a bloodier than we might anticipate. So that's what they're doing, right? they're being proactive.
Yeah, well,
the
you know,
bloodbath.
it's funny when you look at what they're doing, why they've had to do it. It also shows you they're just trying to clean up the house, right? They're just trying to clean up the loan book at SBA, which is probably the right thing to do. I would gather. But it also tells me that should this recession get deep, dark, and bloody, like you were saying it might, they could very easily revert back, right? They could send out another SOP. They can go, hey, we'll get rid of the franchise, whatever that was called, workbook or whatever, right? So it does sound like these things can change and change quickly. So I don't think I would fret this. I would think, I think a lot of things in COVID, we got a little too loosey goosey. It got a little bit too easy, and we got to clean that up, right? We have been running in an economy that was built on fake juice. And now we're going back to the real operators. There's going to be some losses. It doesn't shock me that defaults are up. And I'm excited for what's coming. Because the other thing I think happens in recessions, again, I've been studying them for 30 plus years, is small business franchise starts actually go up. So it wouldn't surprise me if there's people talking about 25 and 26 franchise businesses kind of booming. Because that often happens in recessions. Do you have any data on what's going on or forecasted?
Yeah, so I just got the International Franchise Association's yearly economic forecast for 2025.
Interesting.
And franchise output, well, here's a big one. Franchise GDP will grow by 5%, outpacing the projected 1.9 growth of the broader U.S. economy. Employment is strong in the franchise space. Employment in franchising is forecast to exceed 9 million, adding 213,000 jobs, and then a 2.5% increase in amount of franchise units. That's 851,402. And the total output is 936.4 billion with a B,
wow,
growing by over 4.4% over 2024. Top growth sectors: personal services, retail, food products and services, quick service restaurants. Regional trends: Southeast, the growth its output is looking to be $283 billion. Southwest, 141 billion. Northwest and West, slower growth, with the West expected to see a slight decline. Top 10 states for franchise growth in 2025: Georgia, North Carolina, Virginia, Arizona, South Carolina, Pennsylvania, Tennessee, Florida, Colorado, and Maryland. Technology and trends: franchises are increasingly leveraging what, of course, AI and automation. Optimize operations, improve customer experience, address labor shortages. So I think that was interesting, because I would have thought we would have a constriction or a contract, but it appears that we're not. And my thought process is
So just on that, it doesn't surprise me. Well, first off, we got to remember who the creator of the forecast was. So there's a little bit of talking your own book. Let's just acknowledge that. But I got to tell you, as somebody who's studied recessions and economic pivot points, right? Good to bad, bad to good, right? Because that's what the business cycle is. Is it 8 years? Is it 11 years? This one feels to be 14 years. They're all the same, or they're all similar. They're all similar. I shouldn't say same. They're all similar. And I can pretty much guarantee you that during a recession, you're going to see more entrepreneurs, more W-2 employees lose their job, and they're going to turn to a more stable environment, like a service business, like vending machines. You're just going to see people. And the really big thing I think is coming. This is the wild card. I don't think I've had this conversation yet. Like I saw the CEO of Microsoft just the other day talk about 30% of Microsoft's code is written by AI. That's today. Can you imagine what will be in the next year, the next 2 years, the next 3 years? I think there's a lot of, programmers, engineers, and whatnot who maybe have been comfortable not investing in themselves, not growing, not becoming a 10x engineer, whatever they call that today. And they're going to need a plan B. Not immediately, but shortly. So it doesn't shock me that, the forecast is as such. And I'm, if you remove the talking your own book one, it kind of makes sense to me that it would be up in a recession. It's just how it usually works.
Yeah, there's just the amount of people I speak with. It's like everybody's interested right now. I mean, we
Yeah,
still get the guys
exactly.
that are scared. And I had an interesting conversation today with a couple, and they're like, "Well, we've never managed people," and the guy has a very good job, and he manages people at W-2, but it was like his wife was scared. Like they're like, they want to own a business, they're just scared. And so I
Yeah,
have a lot of conversations. A lot of my job is to coach people and get them to like, hey guys, like let's really look at the worst case scenarios of all these businesses, and let's look, you make this guy was making 500, makes 500 grand a year. I go, look, you don't really have an income problem, you have a tax problem.
yeah,
And so like if you keep on doing what you're doing, you'll end up at 65 and you'll probably have a nice
yeah,
401k, and there's nothing wrong with that.
yeah.
The question is do you're 45 years old right now, do you want to change the trajectory of your financial situation where you have a surplus of, right? Because
Mhm.
but they're ultra conservative, so that's why I give them the business assessment, because that helps me, because it's like,
For
okay,
sure.
I was reading, they're matching them up, and like I know exactly what we're getting into. And so then it's just a matter of, look, like what business, even if we have to get you into vending because it's the gateway to some tax write-off. And I said, look,
For
you
sure.
need to like read a book on taxation, understand these principles, and take some action when you're ready. I'm not going to force you to buy a business, but
Yeah.
I'm going to motivate you to,
Yeah, it's going to be very interesting because I think you're going to have a lot more conversations with people over the next 6 months than the last 6 months because people are going to start hearing more about layoffs, and even if it doesn't impact them, all of them should be thinking about how do I have a plan B? Dude, it's about plan B, right? Again, there's this old saying I've said on this channel probably 100 times. You know the difference between a recession and a depression? Recession is when your neighbor gets laid off. A depression is when you get laid off. And I think a lot of people will see what's going on and call you up and try to figure out. For a lot of people, I suspect in my world, it is vending. It's kind of makes sense. It's not huge overhead. You could pay a kid to fill them up or whatever partial. It could make a lot of sense, and then you get the tax savings if you're a high income earner, and you can walk people through that. So um, I'm excited for what's coming because recessions are where businesses are formed and created and take off. So I know they're scary. Uh, I've thankfully been through a few of them now, so I know what's coming, and it's really opportunity. Opportunity's coming.
Yeah, I agree 100%. I feel like there's going to be great opportunities to buy real estate, great opportunities to buy businesses, and it's just keeping your head up, and like keep like what's going on in the world. And like because I'm in the business and I'm funding these loans and these business transactions and I'm helping people buy business, I see it every day.
Yeah.
I'm helping a guy right now. What is he? It's like under 30 or just about turning 30, and he's buying a $10 million business, and it's
Nice.
going to pay him his discretionary earnings will probably be about $1 million a year, and
Hmm.
he's only bringing in 300 grand of his own money
Hmm.
on a 10 million, because he's got an investor partner bringing in like 700 grand. And I'm like, man, like one move, right? I mean,
Yeah.
obviously he's a go-getter, he's a dentist, but I'm like, man, that is like, that's game changing. I have another guy right now I'm helping, and he's buying a contracting business, and the seller's doing some carryback. And what's interesting about that is this guy is like bringing in, he's attempting to, we haven't got his loan through yet, but he's like a $60,000-$70,000, works in the construction trades, but he's really smart. And he doesn't have much, he might have 50 grand in a like savings, that's it. And he's buying this business for like $2 million, which is
Hmm.
going to like double he's going to pay himself double what he's making in the W-2 world, and he's coming in with no
Yeah.
money, but he's got the other pieces. So it's achievable for all of us. I mean, one move could really do that in business ownership. One move, right? And
Yeah.
so just
Couldn't agree more.
yeah, so just educate yourself and like figure out how to make those moves. Now, not everybody's going to be a one mover, and some of us are going to take 20 moves, but like one rental at a time versus moving into like a bigger asset class. Most of us aren't going to go to like a 100-unit building because we haven't operated any real estate. We're going to buy one single family with a $50,000 down payment. But sometimes you can do these level jumps, and that's the cool thing about the difference in business ownership, is that if he's got construction experience, he can fit the piece, so it makes sense for him. and then he's walking to a very established business. So lots of opportunity out there. That's really the outlook. Like whatever happens with SBA, yeah, I might lose a deal or two and I have to figure out how to help the customers because the funding changed. That's part of the game, unfortunately. Right. And it's not fun to make those, hey, look, we can't structure the deal this way anymore. It's not me, it's the Narn SBA. Right. But life goes on and we'll make it happen. So
no, I think net, this is why you're the professional, why you're the concierge of small business lending. You stay up to date, you stay in the know, and you'll just tell them, hey, we got to find plan B. If you still want to do this, we got to go plan B, and that's okay. And again, you'll be in the game a year from now when SBA changes a different way. And that's why I love that you come on this channel each and every week. If somebody wanted to start a conversation with you, what do they do?
OneRentalMeeting.com. OneRentalMeeting.com.
Yep, folks, there on the screen. Just go to OneRentalMeeting.com, book your time, get that 15 minutes, take the assessment, talk franchises, talk buying a business, talk vending, whatever makes sense to you. Start that conversation. Start talking plan B. Don't get caught off guard. Bo, you're amazing. Take care.
Thank you.